Hello and welcome to another edition of the Business and Banking Dialogue. Ladies and gentlemen, today's topic is expanding the scope of financial inclusion. And we have a dialogue discussion with Mr. Yashish Dahiya, co-founder and group CEO of PolicyBazaar.com. Unfortunately, since Mr. Dahiya had to travel, had to be done today, we had actually done the recording of what you're going to see today, which was actually done live yesterday because Mr. Dahiya had to certainly travel. So everything remains the same, excepting that we will not be able to take up your questions that you may want to have. Otherwise, the format remains the same. So enjoy the discussion, and Mr. Dahiya is there right in front of you. Thank you so much.
Needs urgent cash, but there is no bank branch in the village, and the nearest ATM is perhaps far away. The only option was to reach out to money lenders and borrow at a perhaps excessive rate of interest, which we all know about. However, fortunately, times have changed, and with access to financial transactions, at least as a target for every citizen with the program of financial inclusion in India. A lot more population has been included, but still there are a lot many more citizens yet not having this basic financial transaction facility. Broadly, financial inclusion means that individuals and businesses have access to useful and affordable financial products and services that can meet their needs and are delivered in a reasonable and sustainable way. Having access to savings account is often the first step towards broader financial inclusion to the citizens. So our topic for the day is expanding the scope of financial inclusion. Typically in a vast country like India, with such a lot of population in the remote areas, this is a challenge. So that's the topic we have picked up for the day. And we are live as usual across YouTube, Twitter, LinkedIn, and Facebook. Our guest for the show is none other than Mr. Yashish Dahiya, CEO and of PolicyBazaar.com. You will see his profile in a short while. So while it comes up, let me tell you. Mr. Dahiya, CEO and co-founder, there you are, right in front of you. He is a co-founder and group CEO of PolicyBazaar. Holds a bachelor's degree in engineering from IIT Delhi, a postgraduate diploma in management from IIM Ahmedabad, and an MBA from INSEAD. Wonderful. He started his career as a business unit head at Illinois Toolworks, and later moved to Bain & Company, the management consultants, before starting his entrepreneurial journey with PolicyBazaar.com. He worked with First Europa, a global online insurance broker, as their CEO. At First Europa, he was responsible for leading the global expansion and managing the business of the company across 9 geographical locations. He has also had experience of working with an online travel aggregator, and which is a leading European online travel agency, Abors.com, and led their business as the managing director. A fantastic profile that you can see right in front of you. Mr. Dahiya, welcome to the show.
Thank you. Thank you for having me over.
Thank you. Mr. Dahiya, you are a fitness enthusiast and a successful entrepreneur. You actually left your job in London to live the dreams of people with whom you founded PolicyBazaar.com in India. You turned into an Iron Man, I understand, after you became a CEO. Tell us about your life journey. It looks exciting with what I read from your profile. Tell us about your life journey.
I think when we were starting PolicyBazaar, all of us have at least 3 pillars in our life, maybe 3-4 pillars in our life. And family is one pillar, career is one pillar, Friends is another pillar. And I would say, any passion, like whether it's fitness or whether it's art or whatever, is perhaps a fourth pillar that many people have. And we are all the time balancing between these. And what they say is family is the most important pillar that, you have to always. And for me, I had I'm wondering if this is specific to PolicyBazaar. At the start of PolicyBazaar, for me, I had a job in the UK. My family was in the UK, and they were not going to move. They were not going to move to India. It was crystal clear. Children were studying in schools. They were quite young. My daughter was just 3-4 years old. My son was only 5-6 years old. And financially, see, today it may seem like PolicyBazaar is a success. And financially, it's turned out okay for me. But at that time, that was certainly not the case, right? You were basically starting up something with almost no returns. I did not have a job at that stage. So that's another very important part. You could find in many founders, there is a second income somehow. I did not have a second income. And so it was financially a very incorrect decision from many perspectives. I just had about 1 year of expenses because I had prepaid the school fees and all that stuff. School fees in London are quite high. So, it was a difficult thing to start. And had I not been able to think about the entire team, in terms of the fact that there were 18 of us who wanted to start PolicyBazaar, for me, it made no sense economically or otherwise, because from my perspective, I was in a way sacrificing family and finance. So career and family both were being sacrificed for the sake of what you could call friends, for the sake of what you could call, which became eventually part of family, right? So I think it was a fairly difficult phase. But in hindsight, I'm quite okay to have taken that choice. Because we built a wonderful organization with people who care about each other. And that, helps us a lot. Like, just to give you an example, all of last year, I was in the UK, but the organization continued and in fact did much better than, if I was here. And I think a lot of that is because the team takes responsibility and understands when, somebody would not be there. So I think it's a good thing we have built from a people perspective. And I think part of the credit goes to that initial decision of sacrificing a bit for the group. That's all.
Okay, that's an amazing journey, and I think when you founded this, perhaps
2008. This was in 2008.
Sorry?
And you mentioned about fitness. So I was always fit. I've been running since I was 8 years old. But once I came here, please understand, I did not have a family here. So when I did not have a family, I had a lot of time. Because what exactly would I do from, let's say, 5 o'clock in the morning till 10 o'clock in the morning? I don't have children to drop to school. I don't have any, anything to take care of, right? So obviously the fitness thing started becoming more serious because I was always a runner and all, but I was never into doing, events like Ironman, which take a lot of time commitment. But that happened because, in a way the family leg got dropped and the fitness leg got picked up, which is a good or bad thing, one can't say, but it is, you do what you have to do in the situation that you're in.
Right.
But the good part is somehow I feel it is not your time, but it is your intent. Because today, looking back 13, 14 years later, the family is also in great shape. My wife found a job, children are doing well, my son's in college, my daughter should go to college in one year or so. And they're very nice children. They're very nice human beings. So I feel good. I don't feel like, that I lost anything.
Great. That's good to hear that. And the risk that you took, perhaps, because you had a very comfortable job. And So that kind of has paid this wonderful year. And I'm very happy to hear the 4 pillars that you talked about. And that the 4th one is an art or a hobby. Something I think, ladies and gentlemen, we need to perhaps look at our own individual lives and see what we can do on these 4 pillars. Thank you, Mr. Dahiya. Excellent introduction about that. Let's move on. So the financial inclusion, like I said earlier, aims at providing the underbanked and underserved segment of formal access to financial services. India has made strides. A lot needs to be done in other areas of inclusive finance, such as savings, remittance, credit, government support, insurance, and pension products. What are the challenges faced today to enhance the scope of inclusive finance?
Yeah, I think technology is solving a lot of the problems for inclusive finance. Technology and product solutions are both solving them because people's needs. See, when you look at our entire financial infrastructure, leave out savings bank for a moment, but let us say loans, let us say insurance, proper health insurance, life insurance, everything requires what you call an income statement. Because if you don't have an income statement, if you don't have your, salary statement, so essentially what we have done is over the last 70 years, we have on the retail side built a financial infrastructure which essentially takes care of the salaried and nobody else besides the salaried. So if I don't have a salary, I will not get a loan. If I don't have a salary, I will not get life insurance. If I don't have a salary, and in India specifically, the salary segment is quite small. So the needs of the non-salaried segment. See, salaried segment gets their salary every month. So their ability to repay and their ability to, take money is of a certain type. Whereas when you look at a non-salaried person, he does not get paid every month. He gets paid every day. And sometimes there is more money, sometimes there is less money. And so for them, they require different kind of thinking from a product perspective, from a technology perspective. And a lot of that is starting to happen. Of course, it started off with the payments and now the lending. Now, I think those are all good, but one has to be careful, right? Because what interest rates can be charged, how will delinquencies be managed, are all important parts of the entire chain, whether they'll be mis-selling. And I think the kind of products that are sold at different places need to really be thought through in terms of their utility. So there almost needs to be a need to justify that this product is right for the individual who's buying it. Right. If you see what I mean. So if somebody is taking a loan, is it financially okay for them to take that loan? Will they be able to repay? Some level of understanding of that needs to happen, because otherwise we could have serious problems in the future. And if they are buying insurance, have they really understood what they have bought? We see in our industry, in our country, I don't want to talk about percentage, but a very large number of people who buy insurance do not know what they have bought. And that leads to, disillusionment and, financial loss. So I think the fact that somebody needs to know what they have purchased needs to be handled in a very, and not hidden under a lot of data and legalese, but actually needs to, the top pieces of a product. One is not talking about knowing everything. One needs to know the top 3-4 features of a product, or the top 3-4 pieces of advantage of that product. Why is that product being sold to a particular person? And I think as you would, right, even in the largest of purchases in the world, you don't understand everything. Even when companies buy companies, they don't understand everything. But they do understand these are the fundamental 3-4 reasons why we are thinking of buying this company. And similarly, a consumer also deserves to know that. These are the fundamental 3-4 reasons why I think I should be buying this particular product. And I think that needs to be clear.
Yeah, absolutely. So currently with this COVID happening and the health sector getting such a lot of preference and businesses, how are you seeing your company's PolicyBazaar.com? Do you see a great growth in that?
We would not have thought we would grow because of COVID.
Yeah, I know.
Right, and that is not something we are very excited about. But yes, right now there is a lot of growth.
Yeah.
There's a lot of demand, especially for health insurance and life insurance.
Yes.
March is meant to be the financial peak of the year. April is usually a lull month, which is usually about 70% of March. Currently, we are at about 125% of March.
Okay.
So that is unheard of, that your April is much bigger than your March. In our industry, that's unheard of. So it's a very interesting, and all of these are customers who are getting up on their own, coming to the website, buying insurance, health insurance, life insurance, or coming to our app. So it's all inbound rather than us going to people. We have never in our history gone to anyone and said, please buy insurance. When people come to us, we serve them. So I think it's a good sign on one side that people are becoming aware of the need for these products, and are buying them in larger numbers. On the other side, yes, COVID is a very sad event.
So, there's this two population of two, if you can bifurcate into two: technology savvy and the non-technology savvy. Okay, so the non-technology savvy would, and since you emphasized on technology as a major factor, do they come to your side, or it's only meant for those next gen and technology savvy people?
See, now I don't think that division is any more important between technology savvy and non-technology savvy, because today, except for the really elderly, most people are using technology quite seamlessly. Right. So you look at the number of people who've got payment bank accounts, who make digital payments, who use UPI. You look at the number of people on Facebook. You look at the number of people on WhatsApp.
Yeah.
And the answers you will get, I think that is no longer the challenge. I genuinely believe that is no longer the challenge. There are large masses of people on the internet, and the challenge is no longer, according to me, the challenge is, see, the financial services product can very rapidly ruin somebody's life.
Yeah.
And we have to be very careful. There was this event that happened when lots of apps were giving loans at very high interest rates, and then going and hammering consumers on social media. So I think we have to be careful. One thing, saying that the customer has understood everything because he has signed a document, is the incorrect practice.
Yes.
What has to happen is the salients have to be clear. And the reason why you believe that is the responsibility of organizations. Why did you sell this product to me is your responsibility. In the sense, if you are selling, I see in the insurance industry, people are selling insurance to 60-year-old people. I'm talking about life insurance products.
Yeah.
After their economic income is over.
Yeah.
Or even older. Pensioners are being sold some products. I think a lot of that, the question no longer needs to be why did the customer saw everything and so he signed. The question is, why do you think this was the right product for this customer in the first place?
Yeah.
That's very important. Unless we as a nation and as large organizations are able to answer that question, and be held legally accountable for that answer, I think we could have challenges in the future.
Yes, you're so true about this, because Somehow I begin to feel when I did my first insurance, we just said that, okay, the life has to be insured, that's it. But the clauses in the policy was not something that we all studied. We just signed off,
Yeah, but
And,
my bet is the product was largely of an investment nature, not of a life insurance nature at all. So I think if I come across people who come and tell me they've got 42 policies and they don't know why they have them.
Okay.
So I come across a lot.
Great. It's great talking. So, ladies and gentlemen, as you see, we're having a very interesting discussion on financial inclusion and the financial transactions that are involved. Insurance is one of them, and there could be many others. This being a little general topic, I would like to open up the Q&A box for people to ask questions. Or you could ask a question directly. So I have a question. One person wants to talk to you, Mr. Dahiya, is Mr. Harish Prabhu, and he would like to ask a question directly to you. Mr. Prabhu is an experienced banker. Could you please ask a question? Unmute yourself.
Yeah, good afternoon, Yashish.
Good afternoon.
In fact, during my student days, I used to be an LIC agent. I've sold more than 100 policies. So I understand the agent-led model of selling policies. So full kudos to you to have actually, created this online, sort of behemoth of sorts. But my question is in terms of the mis-selling, the malaise of mis-selling of policies, right? The mis-selling can be, a chalk given to a guy who needs cheese, right? And the buyer of the policy still remains, completely at sea as to what is he exactly buying. I mean, believe me, I'm a finance guy, but I have been now sold policies which I don't know what I bought for, purely because you didn't really go into details, right? So how is that malaise being reduced by in the online format? Because the agent-led model, people will be over enthusiastic in selling whatever, right? And that's something which you can't control when there's a physical interaction. And also, is IRDA doing something, really seriously to, do this? Or is there any measuring benchmark at all to see how much of this malaise is gone or still there?
Yeah, I don't comment too much any longer on the negative parts of the industry, because those are issues that have to be solved over time. But I do talk about, I'll give you some data which might help you, analyze whether digital and the sales-based model are different and why they are different. So if Harish, since you are from the insurance industry, from the banking industry, you would know that 90+% of all insurance policies, life insurance policies are sold in this country are actually investment policies. Very few of them are what you would call pure term insurance, right? Less than a few percentages.
Yes.
If you look at online and what the customer is searching for, within life insurance, 75-80% of what the customer is searching for is term insurance. Today, term insurance is the most researched product in the country. What am I trying to say? Health insurance is the second most researched product in the country. The consumers largely know what they need. Largely, they know what they need. They know term insurance and health insurance will help them in case they have a serious difficulty. They also know they have fixed deposits, they have mutual funds, they have savings accounts. A customer on his own does not come and buy an insurance saving product, just does not. And it is less than 5% of our inquiries. Then why is it that in the offline world, it is almost 90% of all sales? So all I'm trying to say is these two are diametrically opposite. What the consumer wants to buy and what is sold to the consumer are diametrically opposite. And I think even if you look at within term insurance, I would go ahead and explain a little more. Even if you look within term insurance, what is sold online is pure term. If people die, their family gets paid. If they don't buy, their family does not get paid. If they don't die, they don't get paid. End of story. But what is actually being sold if I was to use the term, is more TROP, etc., etc. See, the moment you bring an individual into selling, we have to appreciate that it's very difficult for that individual to think about the buyer. He has to think about himself. He has a family to feed as well. It's not charity. My father, who's a retired army officer, had bought a lot of these policies. And I said, what did you think? Why do you think these people were coming and selling to you? He said, I thought they were the government. I'm telling you, he's a retired colonel from the army, but he actually thought these were government people who were coming in, like Mr. Prabhu, you said that, you were selling LIC policies. Somebody came and sold him policies, right?
Sure.
And he trusted it because it was a government. He didn't feel the need to go into the product and understand why he was buying it. And he bought a lot of these policies. So, and I told him that, Papa, that doesn't happen. I think you're living in a fool's paradise. That doesn't happen. There is no, government employees coming and selling you this thing with no interest of their own. People have to make money. I said, would you go to somebody's house and sell something? He said, no, why should I? I get my salary. I said, yes, you get a salary, but other people don't get a salary. And they have to make money somehow. So they have to sell you something to make money. Now, this basic concept, this basic understanding wasn't with somebody who's, a postgraduate, a colonel in the army, has worked 30, 40 years. This basic understanding of why is somebody doing something was not there. So I think now the regulator has done a lot of things, a lot of very, very positive things. But I think the one thing that the regulator could do, if my opinion was to be taken, is for every product the regulator approves, they could ask the suitability of this product for the person it will be sold to and define who that product can be sold to. That would control things. Otherwise, there is no way to control what goes on. But you don't know what happens in the confines of one room where one individual is meeting another individual. They could be saying anything. It's not a recorded conversation. But if you determine that, okay, I as a regulator have decided this is a good product to be sold to somebody below the age of 40. Okay, that's fine. But I think that maturity is required. Oh, sorry, not that. If it can be done, maybe I'm living in a fool's paradise. Not happen.
If you may allow me to indulge in this, is a very important question which I want to ask you. See, today a lot of people, are trying to do lending, right? And the challenge is to lend to salary people is not a big deal. But the guys who are new to credit and no income proof, right? The unorganized guys who cannot, sort of stack up in their bank statement or whatever, but they need insurance because they are the most needy. And how does, let's say, how would you actually address that and, create a successful model?
In my view, it's a very sad thing to say, but in my view, the real problem of insurance in India is actually not the poorest. It is the middle class. The middle class is not insured as of now. Not even 15% of the middle, and I define middle class, somebody earning about 5 lakh rupees a year plus. Not even 15% of that group is insured as of now. Now, below that, people have a subsistence level of living. They have basic government support. They almost cannot afford anything besides, basic food and shelter. And I think expecting more would be wrong. In fact, my personal opinion is a lot of products that get sold to people like these should not be allowed, because if you look at those products, they sometimes are distributor-centric products. See, much of what happens if you would Let me speak through things like, these small finance companies or whatever, which are, uh, multi-level marketing companies and selling insurance to these customers. Please have a look at those products. The claims ratios will be sub 10%. They're just distributor products. The distributor gets 70-80% commission or whatever. And what is the poor person left with? Nothing. My view is, let's not loot the poor. Let them be. I think the middle class is the appropriate place to be, provided insurance where there's a genuine need, because the middle class does not want to use the government services. The middle class wants to use private services for healthcare.
Yeah.
They want to be dependent on themselves for their funding needs for their children, for their families. They don't want to be dependent on government schools. So I think the middle class is the one which needs insurance right now. I know it's politically not the right thing to say, but then, if nobody says it, then nobody will say it, right? We'll all be living in that emperor's new clothes situation.
Yeah. Very well put, sir.
Thank you.
Excellent, Mr. Dahiya. I think it's strong, brave words. Harish, thank you very much for excellent question. Mr. Dahiya, what is your take on the status of finance, status of inclusive finance, particularly unsecured credit and inclusive insurance in India vis-a-vis the other leading global economies?
See, I think credit and unsecured credit both need to grow, specifically unsecured credit, because people have financial needs for lots of things, and as long as they can pay back. Now, the event when a person borrows is very critical. If a person is borrowing when they are buying something like a white good, etc., they're in a happy position. They're financially okay, and they have a much higher chance of return. I think one needs to figure out models, whether it's a friend insurance kind of model where people get together in a pool, and if I don't pay back, then my friend's credit rating gets impacted, etc. I think new models, new technologies need to be adapted, and new models will emerge. And there's almost no doubt that will happen over the next couple of years in India, because there's a lot of capital available to target that area. And as unsecured lending becomes available, these people will start growing in terms of their financial stature, because they will use that more and more. See, the best returns can come from the really poor. Because if you look at it from a capital and human resource perspective, the ratio is most skewed out there where there's the least amount of capital available and most amount of human capital.
Yes.
And thus, if those two can be combined, and as we all know, if you have too much capital and very little human ability or power, then you can't get a return on capital. Whatever the excess will have a lower return on investment, right? And so the return on investment on capital at the lower rung of society can be extremely high. As long as one is able to make sure that the model works in a manner where the money will come back, or where you're willing to take that particular risk. I think that's the difficult part. Collecting money has been proving difficult in the country.
Okay. Okay. For our audience in general, what needs to be done to increase the adoption of financial inclusion instruments like pension to the senior citizens from weaker sections, credit to MSME, agriculture insurance to marginal farmers?
Yeah, I think more education is required. Education of the people and easy availability of technological solutions with a lot of government support, in the sense the government does a lot of distribution. So like the government did with the UPI, the government can create products which can be distributed by anybody. And I think, yeah, that's what I would say. As a technology, education, these two can be the game changers.
Okay. So let's take another question from the audience. Prabhakar Kaza is from London, was ex-SBI CEO, London. He would like to ask a question. Mr. Kaza, can you unmute and ask the question?
Yes, sir. I hope I'm audible.
Absolutely.
Absolutely,
Great.
sir.
Yeah, good. I live in London and been here in UK for the last 20 years now. And having observed economy, I was in State Bank of India as general manager. Having observed economy in both in India and UK, what I find is that in India, we should not jump to the systems that are available in advanced countries straight away. Like, for example, we say that in United Kingdom, it's always the customer beware. Till it came to the payment protection insurance, where the regulators themselves found that a product that has been approved by them was being sold to unsophisticated customers. And banks had to shell out, I think, about $40 billion odd when it came to in UK itself. And they're still paying. The problem being that the customer is explained when it comes to a simple loan, that how it is related to, say, the forex movement, the coupled with something else, twinned with derivatives and all that stuff. And when I asked our treasury people, why on earth have you sold this to one of my customers who had a degree from INSEAD, France? They said, look, he's got a degree from INSEAD. And that fellow, when I asked him, why did you take this particular derivative? So the fact that you're educated doesn't mean you're educated in all areas, one. Two, a lot of things, and ask this fellow once again, why not did you sell it to him in that case? He said, look, I take 5 customers in a day. I can't go into the background of each and every customer because write his CV, go through his biography, and then come for an interview. I just look at him, ask him what he has done, what he's doing, what does he want. Like you talked about the insurance. I lost my car in 1990 in India, and then went to the insurer. Oh, luckily, the car came back, not worry. Asked the insurer, how much will you pay for this car? That is in the good old days in 1990, and that's an old Fiat car. He said, 10,000. But I said, you have been taking insurance from me for the last 5 years, 20,000. He said, you have been paying it, I've been taking it. I mean, we don't object to people paying more than what the car is insured for. And it is not only in UK, not only in India, but it's the same thing in UK. If my car is now old Mercedes-Benz worth 5,000, if I keep paying 10,000, they'll very gladly take it. But if the car got the angling lost, I'll get only 5,000 more. Not only this, even when it comes to say, inclusive banking that has been spoken of, 5% of the people in UK still don't have bank accounts. But 30% of them don't have debit cards and credit cards for various reasons. So it's not just in India that we do not have access to banking as much as we want. And moreover, giving loans to people who cannot repay on time, we have seen that it led to the 2008 financial crisis, where government had to come out with $1.5 billion bailout, US government. And because they can print currency notes, they could do it. If the same thing happens in India, we are wiped out forever. Our $1, instead of being 75 rupees now, will become 1,000 rupees. I mean, in the sense, we lose our forex advantage, whatever we have in India. So in the same, in UK, I take a house, for example, say for 1 million, which I can't afford to repay in any case. And I don't repay, it's foreclosed. And I go to the government gives me a place to stay, no problem. And I lose my job, government gives me government benefits. There is a huge social fallback, and there is a government help coming in all these matters. In effect, when we try to introduce something in India, like one of our previous RBI governors said, the reason why he did not introduce derivatives in India when he was in charge is that he said, look, I used to tell people I don't understand derivatives. So I didn't want my regulators bank to enforce what they don't understand. These things have come about slowly.
You have a question?
Development. Yep. In effect, the country should go for anything of this sort, insurance, banking, loans, and all that inclusion, only when it comes to that growth, that level of economic development. If we try before that, then we are only sinking the country. I would like to have his comments about this, because in India, I find that we're trying to introduce a lot of new things where people really don't understand. And why are we doing it?
So, Mr. Kaza, I think India is on a very different trajectory to the West. We are, in terms of technology, leapfrogging, not copying at all. I would dare say in the payments technology today, India is more advanced, way more advanced than the UK. So I think whether you look at mobile phone technology, whether you look at payments technology, the UPI framework, the Aadhaar card framework, I think what you are seeing is a revolution which has not happened anywhere in the world. And when I say anywhere in the world, I include China in that. But certainly not in the West. I think the West has got very, if I could honestly use the word, I think very archaic technology and very archaic infrastructure from a tech perspective. It was built a few decades back. If you recollect, France had an internet before the internet. It was called the Minicom. But of course, that was very advanced in its time. But once the internet came, that had no place, out there. So I think India's leapfrogging in technology. And from that perspective, I think India will take very different solutions. Of course, economically at a per capita basis, we're at a very different place compared to the West. And that's fine. I think I agree with you that complicated products must not be introduced before time. But inclusion, digitization, and the use of government rails like the Aadhaar card, like the UPI, like the National Digital Health Mission are a necessity in India. I remember meeting somebody about 10 years ago at a conference who said, I have an identification solution where I'll be able to identify a person. He was from Israel and he used to sell a lot in Europe. I said, please don't even bother coming to India because India is building essentially the Aadhaar card, which you will never be able to compete with. So why even bother, right? If you think about how India has gone about, if you think about 6-7 years ago, we did not know who was who in our country. Who was from India, who was from where, who was, knew anyone, right? It was a paperless sort of whatever, identification-less society, if you would. But suddenly 93%, now 95% of people have an Aadhaar card, are linked banking, linked mobile phones, linked identification. The moment I'm dealing with my bank, everybody already knows who I am. So I think we're leapfrogging in terms of technology and in terms of financial solutions. But I do take your point and I do agree that we should keep products very simple. And I think the regulator has a role in deciding who certain products can be sold to. Just like, on derivatives, it's not perhaps education, it's perhaps how much wealth does a person have or whatever, right? Some criteria that may decide whether they are capable of making those decisions or not. I think that's important because we cannot only hide behind the legal paper and say, look, you signed it. The person who signed it, we have to know that they at least, the proposal was a fair proposal in the first place.
True, absolutely. Thank you, Mr. Kaza, and for your observations. Mr. Dahiya, the adoption of JAM, that is Jandan, Aadhaar, and mobile, has really changed the face of the financial inclusion, right? So also new technologies like big data, blockchain are changing that, pushing those boundaries much more. For the benefit of our audience, can you please illustrate by giving one or two examples how the spectre of financial inclusion is poised to change in the future dramatically?
See, I think government rails on identification and data are a must across all industries. And I say government because we cannot allow that data and that identification detail to be controlled by private entities, because the amount of profitability that can be derived from that is very high. And I think it's best if the government controlled it. And I think Aadhaar and UIDAY as well as your UPI are very good examples of essentially public-private partnerships or government initiatives where the entire identification and payments architecture has effectively been, I think the same we'll see as the healthcare with the NDHM. So I think these are very, very powerful pieces out there. I think layering on this will allow hundreds, maybe thousands of startups to create unique solutions for organizations. If we believe India will not change because somebody will not have enough money to change it, that is absolutely untrue. The amount of capital available to startups today is very comparable to very large organizations. You're seeing organizations get valuations of 2 billion, 3 billion within 2-3 years. Those are valuations that used to take decades for somebody to build, right? And I think the amount of capital available for the Indian financial transformation is very high. So I think you will see essentially this government rails and thousands of bright minds changing the architecture. I think that is what's going to evolve the country. And when I think so far historically, what worked in India was you did not know who. I remember my own grandfather, he was a colonel in the army as well. He used to keep multiple bank accounts.
Yeah.
And bank accounts did not talk to each other. So, to some extent, he used to save taxes also basis that.
Yeah.
That is all gone. That's all history. I think effectively what you're going to see is people will have to be responsible. Otherwise, they will essentially, and I want the word, instead of word salaried, I use the word responsible. Because if they're not responsible, they will be cut out of the growth engines of the industry because people will essentially stop dealing with them. Yeah. And that is what technology and blockchain will bring. That this person bought an insurance policy, he did a fraud there. This person took a loan, he did not pay back. You do that a few times and your name is blacklisted. And then nobody deals with you. Right? And I think what essentially was a society with not much repercussions of your actions, is going to become a society with a lot of repercussions for your actions and a lot of benefit for positive actions.
Sure. So let's look at the insurance sector. It's got an audience will definitely relate to the processes it does in terms of premium collection, servicing, risk management, claims, payout of claims, etc. These are general the processes that are there. Is that disruption or is that process going to be disrupted? And as we have traditional loan, and how it will help in improving the distribution of insurance products in the future?
The reason I entered the insurance industry was that I could see every part of the industry, there is a flow of only two things, information and money.
Okay.
Both of these can be digitally done. So I'll give you an example. Suppose you're a very, very good underwriter.
Yeah.
If a case comes to you, you will have a process of going through and deciding what to do about the case. Why can it not be digitized? What is the difficulty? There's no difficulty. And I think, yes, there may be 5% of cases that may require a human view because the digital programming has not been done yet. They just fall out of the norm, right? And but it'll be 5%, not 100%. I'll give you an example. We used to have this function called survey of a car, where if your insurance policy had lapsed, you needed to get it surveyed. So a person had to come, visit, take pictures of your car, and then decide. That would go to the head office, and the head office person would say, okay, I agree to take on this insurance, etc. That model has changed about 3 years ago. You just come out, you take a video of your car and you upload it. An AI engine looks at the video, figures out if there are any dents, scratches, if there's a crack in the windscreen, points it out, says what is insurable, what is not insurable. In real time, you get your policy. The same thing on claims. So I think the digital world is going to intervene massively. Second part, if you look at motor insurance claims, why would you claim if you haven't had an accident or your car is lost? If you've had an accident, you've had some kind of dent, etc., right? You cannot claim insurance just because your engine broke down, unless it is, during a rain or something of that sort. So it's usually accidents, and it's not breakdowns. Insurance does not cover breakdown, really. Breakdown of car is not really covered by insurance. So if your brake pad goes away, you don't get insurance for that. You get insurance if your car gets damaged because of an collision. You appreciate, right? A bulk of the work will have to be done by a body shop. You don't require so many body shops. You require maybe 5 body shops in all of NCR to service all the cars and have some spare part. So I think what you're seeing is a transformation. With the National Digital Health Mission, your claims will, what is there in insurance policy? There are terms and conditions. They can be digitized. The hospital bill is digitized. They can talk to each other in terms of what is covered, what is not covered. The back end in terms of pricing of products for a particular insurance policy, it can be connected. So basically, any insurance policy is a 3-way contract between service provider, customer, and the insurance company. And whether it's motor, whether it's health, whatever. And this can be easily triangulated. And what you're seeing is a lot of work going on, a lot of startups trying to solve this problem. And I see that in the next couple of years, you will have dramatic solutions coming out there. And again, on the back of what? On the back of either a Vahan database from the government of India or a National Digital Health Mission data from the government of India. So I think the government has a very significant role to play. And why does the government have a role to play? I'll explain. Suppose I go to the service provider and say, please give me an ID. It's up to them. They may give it, they may not give it. But when the government mandates it, it becomes law.
Yeah.
And that is exactly where magic starts to happen. Because once it becomes law, the entire architecture is changed. Nobody has an option. If, Mr. Kaza would know, in the UK, for example, once they've done open banking, every bank has to share the customer's details in the open banking format. So the customer can choose to access his details from anywhere. Now, nobody else can make that happen except the government.
True. You said that the transformation of a claim has undergone a change, and all you do is digitize it or take photographs and all that, send it across. But I don't know, many may relate to the audience. But if we do send the car and then the garage says that call the surveyor. Surveyor will come check, the insurance guy will come check, and then he will pass, and then only I can repair your cars. So, is that changed?
Part of it is changing. So see, when we talk about change, it doesn't happen in one day. It happens over a period of time. It doesn't happen for all insurers together. It happens again over a period of time. It doesn't happen for all claims. It happens for a certain set of claims. So yes, things are changing clearly. In many a claim, there is nothing like a surveyor involved.
Okay.
In some, yes, there is.
All right, that's a great change. Mr. Dahiya, can you tell us some tech-enabled products? More because we're a technology company. Some tech-enabled products around the world, which are good products for life, health, general insurance, which illustrate the innovation for deepening inclusive efforts.
So I think if you really think about India, in the last few years, term insurance is a great product, which has grown from nothing in 2009 to one of the large products in the country today. A few companies like Lemonade, Oscar, etc. have Zongan have created essentially experience-based products where people can buy very rapidly, and there's a lot of trust. So you've basically gone to an environment where there's a lot of trust-based, low-friction environment. So, I don't need to check a lot. I basically trust the other individual, and I have enough data to back me up. And yes, I'm okay to make a few mistakes in the early days and allow for small failures. But if small failures happen, then that same person is penalized in the future. So they basically get cut out of the whole. It's like friendship, right? You make friends with somebody. You do on your first day, you don't go and do a big favor for them. But over time, you develop a relationship, and then you know what the person is like. So if 30 of my acquaintances, if all 30 of them came and asked for the same thing, I know I'll give for 5 of them, not for the remaining 25. I'm just making that up, right? Because I know that there's a certain character to those 5 and there's a certain character to the remaining, right? So I think those pieces are going to get technology enabled. There's no doubt about it.
Okay. Yeah. Good. We'll see that. I'm sure everything is getting into technology, so we'll see some change there. So, Mr. Dahiya, India has been on the forefront of driving the adoption of digital payments. You mentioned about UPI being such a roaring success. Should the government allow national payments infrastructure, providing entities such as NPCI and the new NUEs to include insurance and credit in their repertoire of products to rapidly broaden the scope of financial inclusion?
They certainly can. I don't see why not. But please understand, when you provide insurance or credit, see, in payments, you're taking money from somebody or giving money to somebody. So you can essentially have what you call a profitless transaction. But in insurance or credit, somebody has to make money. And what that implies is, unless you have an absolute mutual which says all my profits I will give back to my customers, right? Which again has its own problems. But I think my view there is it would have to be a marketplace like environment. And then in the marketplace everybody wants to do better than each other. So it'll be interesting how the government manages the marketplace.
Okay. So a question has come up and says, in rural areas where they actually lack customer footfall and lower awareness among potential customers, make the business correspondence agents unviable, as we all know. What suggestions do you have to make BC agents model sustainable? So there is a problem of sustainability of this business correspondent agent model. Do you have any thoughts on that?
I think the only model that can work is an education model where the person initiates the first transaction, but the remaining part is handled through technology. So I come to you, I make you understand the product, download an app, get active on it. But once you get active, while I derive the benefit of your activity, you don't need to interact with me anymore. After that, you are on your own. If you find value, you keep using the product.
But the business correspondent model has been going on and is still going on, and but there is that sustainability is still a problem, and technology, all that can help. So any thoughts you have on that point? How do we keep, or is there any other model you think of?
My view is eventually, I think the customer just needs education in using the app. He does not need to be pushed products. Let the customer decide.
Okay.
At some level, we need to step back and let the customer decide. We can educate, and that can be done through digital medium. So I have been operating. Let me put it very simply. I have now been living in India for the last 20 years. I can't think of a single incident when somebody has come to me to sell something which was actually beneficial to me.
Okay.
So I think let's not think about our sustainability. Let's think about the consumer's benefit is more important.
Sure. Great.
There are other things we can do, right? We don't have to be in financial services alone.
That's true. That's true. Thank you, Mr. Dahiya. So, Mr. Dahiya, we come to the our end of session because it's a complete 1 hour. Thanks for coming. Would you like to summarize for our audience what are the new things that they can see coming out in this space in the near future, post-COVID?
I would just make one statement. I know today to a lot of people who've got a lot more experience than me, especially in the insurance or banking field, a lot of you would think, and rightly so, that perhaps this person is being too utopian, or maybe he doesn't understand, etc.
Yeah.
My request to you for your own good is the change is coming and it's inevitable. There's no doubt about it. And in the change, only one thing matters. That's what I'm realizing. The only regrets I have is when I'm not customer centric. So we have to forget ourselves. We have to forget our distributors. We have to forget everybody. We can only think of one person, which is the customer.
Absolutely.
And if we are unable to do that, I'm saying myself, I'm not able to do that all the time. I'm telling you, right? But those are the failure points for any business. Whenever they are not able to think of the consumer first and somehow bring themselves in the middle,
yeah,
that is when somebody else will come and do what is right for the consumer. And at some point in the near future, we won't have a business. Now, at some point in the near future, from many people's perspectives, may not matter. Because it may happen in 10 years. It may happen in 20 years. It may happen in 2 years. And somebody who's got 10 years in a job left, it may not matter at all. It's okay. They can continue to be the way they are. But I think that is where the agency problem comes in, right? Are you the organization or are you the individual? And if you are the organization and the shareholder of an organization, then according to me, if your organization is not doing what is right for the consumer, eventually you as a shareholder will suffer.
Yes.
Unless you're just thinking very short term. So I think that's the message I would leave people with. I think PolicyBazaar is a good example of an industry which actually thought this change would never come. I'm telling you honestly, people thought the consumer would never engage. The consumer is meant to only be sold. Nobody ever buys insurance. They will only be sold. Please understand, today 15% of the country's insurance is bought over the internet. 15%.
Yeah.
It's a very, very large percentage.
Yes.
And I'm talking about by premium, right? So I think the change, all I'm trying to say, the change is coming and coming very fast. So we have to just adapt ourselves to it.
Absolutely. Wonderful talking to you, Mr. Dahiya. Ladies and gentlemen, one of the things, good things, one of the things he said is think customer is first. And that's a kind of change, and everything else is immaterial. You know, those kind of changes will happen. But if you don't focus on the customer, I think we will have a problem. So think customer first. And that's great take from what Mr. Dahiya says. Mr. Dahiya, thank you very much for coming and spending your time with us and telling our audience all about the expansion and in terms of financial inclusion and the technologies and the disruption forces that are coming. A lot we covered in this 1 hour. And thank you once again for coming and talking to us.
Thank you.
Thank you very much, sir. Thank you. Thank you, audience. And so hope to see you on Friday. Bye-bye.